talk about gold and silver, I mean, they're known throughout the world. That they've got global recognition. They're portable and tradable throughout the world. And so I think that people should have at least some exposure. It doesn't matter, even if it's 1% of your portfolio, to something that has survived thousands of years as money.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Welcome to another Silver Doctors exclusive. Today, I'm excited to have first-time guest, Mr. Simon Popple, the author of Brookfield Capital Newsletter. Today, he's joining us here on Silver Doctors to talk about the global economy, the importance of precious metals, as well as a variety of other subject matters. So, Simon Popple, welcome to Silver Doctors.
Great to be on the show.
Well, I thank you for taking time to sit down with us. It's been great going back and forth prior to the show, just getting a chance to know you a little bit better. And so I'm definitely excited to get your thoughts on a variety of subject matter. And before we dive into that, for those that do not know who Simon Popple is, can you give us a little bit of your background and how you've arrived at this current point in your career?
Yeah, no, absolutely. Well, I mean, I started off working in the city like probably a lot of your guests, and I've been raising capital for probably the last 10 years. And over that 10 years, I've also been writing newsletters. I wrote one with Money Week, which is a sort of a very popular magazine here in the UK, and that was called Metals and Miners. And then more recently, I wrote Gold Speculator with Jim Rickards, who may be familiar to some of your readers and listeners. And so we've done that for a couple of years. And I've had Brookfield Capital newsletter going for about 6 months. And I'm enjoying the freedom of writing about whatever I want.
All right, sounds good. Now, I'm interested in your thoughts, and so I'm dive right in. I have a long list of questions, and so I want to get an idea as to, what can start this off for this conversation here. So I'm curious to find out, what are some things that concern you currently about the markets, the global economy, or whatever? What are some things that concerns you halfway through this point of 2019?
Well, my biggest concern really is that if you look at the way the market behaves when there's a downturn, I mean, the people have always moved from what they perceive as riskier assets, such as equities, into bonds. I mean, it's such a tried and tested route in a recession to move pretty much lock, stock, and barrel from equities into bonds. And I recently, did a bit of work and listened to some stuff by Jeffrey Gundlach, who's probably very well known to you, and he's got some massive concerns about the debt markets at the moment. And he's saying a recession could be the catalyst that converts a lot of investment grade debt into junk. And that sort of set alarm bells off for me, because you're kind of thinking, well, if people are used to switching from equities into debt, are they jumping from the frying pan into the fire? And obviously I like gold, but I wouldn't consider myself as a gold bug. I mean, at the moment, if you look at where the market is, I think gold is one of the few assets that's not in a bubble. And so that's why I've been looking more closely at the market and have some genuine concerns for how the man in the street is going to fare when we have a recession.
Right, understandable. And so you mentioned, the debt and just the bond market itself. And so as you were saying that, a lot of things came to mind in reference to the idea of who predominantly holds those instruments or financial instruments that have been considered safe havens, and it happened to be in a lot of retirement vehicles, as well as just the pension side of things. And so let's touch on that a little bit. And so if this debt turns out to be a real issue, like a lot of people say that it is, what are your thoughts on how it's going to play out as far as in people's actual portfolios and their investments? A lot of people stand to lose a lot if debt becomes an issue, like Mr. Gundlach mentions.
Yeah, absolutely. Well, I mean, obviously debt falls into two buckets. You've kind of got your sovereign debt and you've got your corporate debt. And I mean, sovereign debt is going up and up. And there's a graph that we can take a look at, which shows every time there's a debt ceiling, the debt has just sort of shot through the ceiling. So they've had to increase the ceiling. And that's been going on for a number of years. Now, the corporate debt market is about 8 trillion. It's huge. And I think it's about 3 times the size it was in 2006. So I think my concern is we're in really uncharted territory. And if we do have a recession and some of this debt does convert from investment grade, which is obviously okay for people's sort of pension funds and things like that, into junk, where I'm assuming it wouldn't, then what happens? And I think when we do have a crisis, I think common sense, people look and think, oh well, actually, that it was obvious that was going to happen. But at the moment, common sense seems to be not so common. And I think that people will be quite shocked if the debt market does blow up.
Right. Now you hinted at recession, and so assuming that this next go round won't just be an isolated event, it will be a variety of countries apart on this entire globe here. And so, do you think there will be any particular domino that will lead the way? Will it be in the U.S.? Will it be Europe, Australia? Like, is there any single point entity that can kind of get this thing started in a sense when it comes to this recession that a lot of people think is coming?
No, absolutely. Well, I mean, what I was most concerned about for a long time was, the old black swan concept, that something was going to hit the market wasn't expecting, and then you have, the dominoes would start to topple. But Jeffrey Gundlach is saying that, a recession would cause, the market to be in turmoil. So, and that recession can come from so many different places. And, we're already in what I would view as challenging times. And now we've got this trade war between the US and China. And typically recessions come sort of every 8 or 9 years. And so in theory, we ought to be in a recession now because the last one was sort of 2009. It hasn't happened. And I think there's probably a very good reason why it hasn't, because I think it could be quite traumatic.
Right. I do agree. And speaking of, it can happen any moment. Just as of, I think it was July 1st, we entered into the longest economic expansion here in the U.S. in particular since 1945. So that's 10 years counting. And so we have a Federal Reserve chairman here who's really bent on keeping this expansion going. So in his mind, he doesn't want this thing to end. And I'd imagine because he realizes if it does come to an end, then there's going to be some serious consequences to all the monetary policy. So let's touch a little bit on how the last response, as far as the QE, the stimulus, zero interest rates, all those things were implemented, and they appear to be something that's permanent. But, where can it go next if this recession hits and it begins to unravel? Will they do the same thing or a little bit more, in your opinion?
Well, I think everything really is based on trust, especially with the debt market. And if you look at what's happened to GDP over the last few years, it's grown, but it's very much fueled by debt. So if that goes into reverse and the growth disappears despite the debt, then, as I said earlier, we're in uncharted territories. And it really is quite unnerving to think what could happen, because typically when you've had a recession, you've had interest rates relatively high, interest rates have been dropped, and that's stimulated growth, and the recession has disappeared. But now we're at these sort of ultra low interest rates. I mean, I think in Germany, only about 15% of their bonds are actually in positive territory in terms of yield. That the toolbox seems to be empty in terms of what would normally happen. And so I think that's one of the reasons why we could get into more money printing if there was a recession. But when we had the last round of money printing, the idea was we'd have quantitative tightening as well, so it wasn't going to go on forever. But if the public see that that didn't work and more money has been printed, then there may be a sort of a tipping point where people just sort of don't believe.
Right, I understand. Now, speaking of the stimulus and stimulating through quantitative easing, I actually read a report not long ago referencing that the ECB, if I'm not mistaken, is talking about possibly September. I think I read somewhere about getting back into quantitative easing. And so, given the fact you're on that side of the water there, what are your thoughts on the ECB beginning the QE policy? Would it be U.S. leading the way or the Europe area leading the way when it comes to quantitative easing first, or together or simultaneously, or what are your thoughts?
I think there's going to be some joined up thinking. I can't see the ECB doing something without consulting the US. So I think there will be some joined up thinking in terms of what to do next. And I think that that will be for everyone's benefit, because the last thing you want is them working in isolation. But again, whether it's the US or the ECB, I don't think anyone really knows what the outcome's going to be.
Right, I do agree. And so I know that, from just watching closely to what's happening over here in the U.S., is that so far on the Fed's balance sheet, 4.2 trillion, give or take. And you mentioned quantitative tightening is not part of the equation anymore. So they're going to have to end up adding to that. And so based upon what has happened in the past, there was approximately several trillion brought into existence over here as well as over in that region. And so do you think that that's going to be the expectation for this next recession, or would they have to double or triple that to try to get the same effect as far as stimulating and calming the markets if there is a mass panic similar to what could have happened back in 08, 09?
Well, it's very difficult to know, because I think that you're right, they will have to print more money to sort of make sure that there's plenty of liquidity in the system. But at what point do they print too much money? So you start getting rampant inflation, and I think that's particularly worrying for anyone who's moved from equities into bonds, because unless they're index linked, if you're in a fixed income instrument where you've got rampant inflation, especially with negative yields, you really are hurting. And so there's so many sort of issues out there, and I think that the central banks have really boxed themselves into a corner, and there's a lot of smart people out there, but no one seems to have come up with an answer, and which kind of implies there isn't one. And so we could easily find ourselves in a situation where we're literally guessing in terms of what's going to happen, and if I'm honest, I don't think anyone really knows. Right,
very true. Now, so since you're over in the UK region, I'm curious to find out the developments and where it all stands with the Brexit. I remember that being somewhat of a subject matter here that's not really talked about much, because once again, we have our own issues. But for UK in particular, if you don't mind speaking on that, I'm curious to find out, where's that process now, and where can that? I've heard people mention that could be the trigger to lead to some type of real systemic event. But what are your thoughts on that as far as the Brexit aspect? How's that coming along thus far?
Well, yeah, I mean, Brexit's it's obviously not coming along very well. We've delayed it until I think it's the Halloween, which is a bit spooky to say the least. But yeah, I mean, it's any event like that could be cataclysmic for the economic system. Talking from the UK, no one really knows what's going to happen. We don't even know who our next prime minister is going to be, let alone what they're going to do. I think both of them have said they want to get out of Europe, and that they will deliver Brexit. But I think until we know who the prime minister is, it's very difficult to know what their policies are going to be. But I think sort of having seen what happened with Theresa May, the implication is it's not going to be simple to extract ourselves without any kind of economic turmoil. And we're already sort of, I wouldn't say grinding to a halt, but the economy is clearly suffering because of Brexit. And the $1 million question is it going to get better or worse post Brexit? And again, unfortunately, no one knows.
Right. And I would imagine that the issues that you guys are facing there are very similar to what we have here. And so back on Main Street, so a lot of these issues we're talking about originated on Wall Street, being propped up by the central banking concept and model. But yet those on Main Street, I want to get a little bit into that, because those are the people that are hurting most. So over here, some of the primary topics, which I'm assuming you guys can relate to over in your area, is all-time student high debt. We have real estate prices are at all-time highs, but yet property's not really moving like that because they're overvalued. We have a homelessness issue here, credit card debt. We're setting a lot of all-time highs because Main Street seems to be tapped out as a result of this monetary policy. It's left a lot of people with very little disposable income. And so, so I assume the same situation is happening over there. Give us a little bit of what life's like on the main economy for those in your region and where we're at in this current cycle of this debt cycle, rather.
You say debt cycle rally, and I think that's very pertinent because I think a lot of people who are now investing and millennials, they've only ever seen real estate go one way, which is up. And so, they've been very happy to put a small amount of equity or whatever they've got because house prices are so ridiculously high, and take leverage that their parents and older people would bulk at, because their view is that house prices will continue to go up, and they'll be making money. But anyone who's lived through a housing crisis, like happened in the 80s, can see what happens, and it's ugly because leverage is fantastic when things are going up, but it really hurts you badly when things go into reverse, and it can wipe out any equity that you had and put you into negative equity, and that hurts people on so many different levels. Man in the street, I'll give you a good example. A couple, they'll perhaps move into a house which may be a 1 or 2 bedroom house. The view is that they'll be in it for 6 months, and then or a year, and then when they decide they want to have a family, they'll move into a larger property. But if you get negative equity, you can be stuck in that property for years and years, and that starts to affect people's sort of outlook on life, because do you want to have a family in a 2-bed flat or a 1-bed flat? And so I think the man in the street could get hit incredibly hard if there was a shock to the system, which I think is one of the reasons why the authorities are doing everything they can to ensure that doesn't happen.
Right, I do agree. Now, and so we kind of covered the issues that we all face. And so it's not just a U.S., U.K., Europe. This is a globally systemic problem we're all facing. It has to do with the nature of our monetary system. And I'm of the mindset that everything is starting to rear its ugly head above surface, to where Main Street is really beginning to see, because they can feel the effects of this current paradigm we're in. And so precious metals, gold, silver, things that have been historically money are starting to get a little bit more attention because of recent price spike last couple weeks or so. So let's get into precious metals, because I'm of the mindset that gold and silver is actual money, and everything else is usually a claim to that. So give me your thoughts and scenarios of where precious metals stand at this current point, and how important is it in your opinion?
Well, I think they're very important, because I think that talk about gold and silver. They're known throughout the world, that they've got the global recognition. And so, they're portable and tradable throughout the world. And so I think that people should have at least some exposure. It doesn't matter, even if it's 1% of your portfolio, I think you should have some exposure to something that has survived thousands of years as money. As I said earlier, I'm not a gold bug. I don't think gold is necessarily the answer to everything. But I think that people should have at least some exposure to gold and silver, and it's tangible, it's real, and it makes me smile a bit, because Bitcoin is depicted as a gold coin. I think we all know it's not, and good luck to the guy who gives his wife a digital ring. But I think that people really should think about what could happen, and not go crazy, but just put some sort of measure or structure in place, just to try and protect them a little bit if things don't sort of unfold as they expect.
Right, I do agree. Now, in your opinion, because gold has not getting the same amount of attention as the cryptocurrency side of things, because you mentioned Bitcoin being image of a gold coin, and so it looks like the mainstream media now is jumping on the bandwagon of encouraging and promoting as an option, as an alternative to this current system, I guess the usage of cryptos in the future. So they have this mass adoption of cryptocurrency. And so gold is not really mentioned as much in reference to a safe haven or preservation of wealth. And so in your opinion, the price of gold, 1,400, clearly is not what it should be if you take into account all the currencies in creation. And so if there is an issue, where do you see the price of gold going or silver going? What should it be in comparison to all the other digital and claims to wealth that has been created as a financial investment that people are utilizing now?
Yeah, I think there's 2 points there. I mean, I think first of all, if you look at the relationship between gold and silver, that ratio is very much out of whack. I think, typically it's been sort of between 50 and 60, and now I think it's about 90. So that would imply that either gold is expensive or silver is ridiculous, very, very cheap. I personally think they're both cheap, but silver would appear to be slightly cheaper than gold. But in terms of where gold could go, I mean, I think that's very much a function of normal supply and demand. And I think that people, very, very few people have any exposure whatsoever to physical gold and silver. And I think that even just having a very small allocation of their portfolio to gold and silver, because it's such a small market relative to the markets we're talking about, like equities and bonds, could have a dramatic impact on the price. A bit like what's happened in sort of digital currencies with Bitcoin. Where the price could go is really anyone's guess. I mean, I think a lot of people don't really understand where gold comes from, sort of in the Earth's crust. It sort of arrived there, and there is really a finite amount of gold in the world. Yes, they keep finding more, but new discoveries are becoming more and more difficult to find, and so it's you can't print it like you can money and digital currencies. You can create more of them. So I think at some point, I don't know when, but I think at some point the price of gold and silver really could take off, because people will they won't be able to print anymore or make anymore, and supply and demand will reach a price. What that price is, I don't know, but I think it could be dramatically higher than where we are at the moment.
Right, I would agree. And just as more, I guess, not proof or evidence, but yeah, if you just pay attention to what's happening in the Eastern Hemisphere, further east between China and Russia, it looks like they recognize the importance of gold, because, we don't know their official holdings, but we're given these fictitious numbers of what they possibly could be holding. So clearly they see the value in having gold, especially, do you think that a part of this next, after everything settles, the recession hits, monetary policy probably goes a little bit too far, that there will be some new system in place where gold or silver might be incorporated in the monetary system again, in your opinion?
I think a lot depends on, going back to this trust issue, because I think whatever the answer is or the solution is to the current problem, trust is going to become very important to people in the next phase of what happens in the world. And so I think, given the limited supply of both gold and silver, it would be no surprise to me is if they are part of the new trust system. You say gold's moved from west to east. I completely agree with that, and I think that when it goes from west to east, I don't think it's going to come back or anything like the prices that it is at the moment. So I think there's a few things at play here. First of all, you've got gold being essentially taken out of the system, and secondly, you've got this sort of this trust element of whatever the new world order is, where I don't think you'll be able to back any currency completely with gold or silver, but I think what you'll have is probably a basket of products, investments that will form the anchor for a new currency. And it'd be no surprise to me if gold and silver weren't part of that basket.
Right. Well, Simon Popple, it's been great having you here on Silver Doctors. Any last thoughts you would like to leave us with, as well as let the viewers know where they can find out more of your work and stay in tune with what you have going on? Can you share with us some information?
Yeah, no, absolutely. Well, I mean, I call my newsletter Brookville Capital newsletter because I wanted to write about everything, not just gold. Previously I've written Gold Speculator with Jim Rickards and Metals and Miners and Money Week, and whilst I love doing that, I think that you need to be able to write whatever your current thoughts are. And at the moment, I think gold is very topical, but that may not be the case in a few years' time. So I think that I'd urge people just to think about their own situation and whether or not they choose to buy a newsletter or not, but at least think about what's happening in the world and prepare in some way, shape, or form to make sure that them and their families are okay when it, or should anything happen.
Once again, thanks for joining us here on Silver Doctors.
Thank you very much. Very much enjoyed it.